Ecolomondo Corporation is a Canadian cleantech company listed on the TSX Venture Exchange and OTC Markets Group, set to become a global cleantech innovator and strategic partner to industry and communities. With an extensive 25-year history focused on waste-to-resource technology development and deployment, our mission is to mobilize widespread industrial resource recovery and reimagine sustainable waste management opportunities that efficiently transform end-of-life products into high-value circular resources with low carbon footprints. We take pride in our proprietary Thermal Decomposition Process, or TDP, a green technology that transforms hydrocarbon waste into high-quality and high-demand commodity products that are needed to manufacture industrial and consumer products that we use in our everyday life. Ecolomondo will be completing its first fully commercial TDP facility in Hawkesbury, Canada, that is expected to produce 22,400 metric tons of reusable commodities. We are also preparing for our second commercial facility, a 6-reactor TDP facility to be located in Shamrock, Texas, with 3 times the capacity of the Hawkesbury facility. TDP is proven and is technically more advanced than other pyrolysis technologies. This technology is also environmentally friendly, with substantial carbon dioxide reductions, lowering carbon emissions by up to 90% versus virgin carbon black production. It is almost energy self-sufficient, using some gas produced during the decomposition process to heat the reactors. Our strategy is to become a major global manufacturer, vendor, and operator of TDP turnkey facilities, and for now, specializing in the processing of ELTs. Our global rollout can be achieved much faster than the competition because our TDP technology is modular, enabling us to deliver a turnkey TDP within 18 months. We plan to market our TDP technology around the world for the next phase of its global expansion as part of its rollout strategy in the future. Ecolomondo, value your world.
Hello, and a warm welcome to Ecolomondo's second interactive webinar of the year. The introductory video you've just watched serves only as a foundational overview. We will delve much more in depth into those topics during today's discussions. I am Moneer Barazi, your host for today. It's a privilege for us at Global One Media to collaborate with Ecolomondo and its CEO, Mr. Eliot Sorella, on this exciting event. As most of you know, Ecolomondo is a leading Canadian clean tech firm headquartered in Quebec, Canada. With several decades of expertise in resource development, the company is steadfastly committed to propelling the circular economy forward. It is publicly traded on the TSX Venture Exchange as ECM and the OTC as ECLMF. Before we start, a short risk disclaimer is in order. Kindly note that this event will contain forward-looking statements from Ecolomondo and that Global One Media is not a registered broker, dealer, or investment advisor, therefore serving only as a host to this event. This webinar is being recorded and will be made available later for viewing on both Ecolomondo's website and Global One Media's YouTube channel. The links to these websites are provided in the chat for your convenience. Additionally, recordings of Ecolomondo's previous webinars can be accessed on those same websites, offering insights into Ecolomondo's ongoing progress. We encourage an interactive session today. Please feel free to submit your questions in the chat box after the end of the presentation. We will do our best to address as many of them as time allows, giving priority to the more pressing ones. It is now my distinct pleasure to introduce Mr. Eliot Sorella, Chairman and CEO of Ecolomondo, along with key members of his leadership team to start today's webinar.
Eliot Sorella here. I want to thank everybody for joining in. Hopefully we'll give you a little bit more insight into Ecolomondo and a little bit more of a comprehensive outlook as to where we're going into the future.
You recently announced that you've started production at your Hawkesbury facility. Can you provide more details about this facility, such as the number of reactors its production capacity, and the timeline for fully ramped up production. Perhaps you can also shed some light on the facility's economics, such as the capex and EBITDA in the future.
As you all know, we broke ground in Hawkesbury, a two-reactor facility, in August 2019. We were hit with COVID in March 2020, and we built the plant right through the 2.5 years of COVID. Today, the plant is totally complete. We've been working on our testing and commissioning since January. We're now at the stage where we're ramping up. We're actually producing products, shipping some of them. We are working right now on the efficiency of the equipment, making changes as we're going along, and we're ready to start. We're actually have started commercial production, but we will ramp up the aggressiveness as we're going along, and hopefully by year end, we'll be very, very close to break even, if not generating positive cash flow.
Let's talk some more about those adjustments. You're continually making adjustments to your process to ensure improved efficiency. Can you explain some of the milestones achieved, and can you carry those lessons learned forward to other facilities in the future in a way that reduces costs and increases efficiency from the start?
Right now, we're earmarking a lot of cost savings to be adapted to new plants that we're building. The efficiency will bring improved EBITDA because we're going to be producing more waste than anticipated. For example, in Hawkesbury, we were planning to do batches of 15,000 pounds. We're now already, our payloads are up to 16,000 pounds. Building the first plant, you always safeguard that we understand now. In certain cases, we overkilled on quality. So we'll be considering all of these changes and reducing our capex going forward in these plants, and therefore reducing our cost per ton of our capital cost per ton of capacity. So this will translate into better EBITDA and better profits for each of these plants.
And you've recently received approval from the Technical Standards and Safety Authority of Ontario, the TSXV, to use syngas produced from the process as the primary energy source for Reactor 1. What implications does this have for your production, and do you have a clear timeline for receiving approval for the second reactor?
It was a major milestone that we achieved to be able to reuse the gas that you're producing. So it has virtually little cost because you're taking waste and creating products, and which one of them is the syngas. So instead of buying natural gas and having to pay for it, here we have it at our disposal, which lowers the OPEX cost per ton of capacity, which also it will translate into better EBITDA and better profits. The second reactor we're readying it now to use the syngas also, and I anticipate within the next week, possibly 2 weeks, it also will be certified to use the gas that is the syngas that's been generated by the plant, making these plants almost energy self-sufficient.
And that is not the only milestone you have achieved. Your facility has also received ISCC certification, another great milestone. Can you provide more details about this certification and perhaps touch base on your ESG policies and their significance to your stakeholders?
Well, ESG in today's world is extremely, extremely important because people want to purchase waste, not waste, but want to purchase recycled products. But they also want to know that it's being done responsibly. ISCC also serves a similar function. However, it benefits the companies that are buying recycled or recovered products because it gives them an added advantage. So they're able to sell their product as a sustainable product. Therefore, this is a very, very important achievements because it also opens additional markets for us. And in some cases, it gives us a little bit of an edge and a higher revenue because because our products are considered sustainable. A lot of companies that are looking at their emissions or their carbon footprint, they would prefer to buy products that are ISCC certified.
And speaking of the benefits that customers will receive from your products, do you have offtake agreements with customers as you increase production?
Well, most of our customers are buying. As we're increasing production, we're going to sell our products to customers. The customers that we have in place right now have tested. Some of them have purchased them at industrial scale. And we're quite confident that going forward, we'll be able to sell everything that we're producing at the Hawkesbury plant as we are producing it.
Let's talk a bit about the financials. You've recently published your interim results for the second quarter of 2023. How did Ecolomondo fare during the period? And given the current pace of production and expansion, when do you estimate ECM will reach the break-even point and begin to transition to profitability?
Moneer, that's a very, very important question. I'm very, very proud of the performance of the Ecolomondo. If you compare our performance versus the performance of our peers in the industry, you will see that in most cases, Ecolomondo loses only a fraction of what the others lose. And the reason that's being done is because we have people on staff that are committed. Our milestones were that have been achieved were engineered and were also overcome in the past. So today it translates into improved or reduced risk for the investors because we've done all of this work. So I'm very proud to say that even though we're losing money, we are losing a minimal amount of money when you compare it to our peers. If you look at the history of Ecolomondo, we've raised a minimal amount of cash because we've not only have we been very vigilant in spending the money, but we've also been very, very careful in making sure that we buy equipment that is needed and only needed, even though we have not cut any costs. This plant has cost us a lot of money. However, going forward, we will be able to produce large quantities of products from waste and getting paid to process that waste. It's a great business and great business model, and I'm proud to head the company. It's been tough. I'm not going to say to anybody it's been easy, but I can tell you it's been a lot tougher than our peers, and we're much further ahead at a much lower burn rate.
It's probably tough because you're doing innovative work and you do emphasize efficiency in several aspects of your operations. And while we're on that, can you tell us a bit more about the liquidity you currently have? Do you have sufficient liquidity to fund the expansion? And where do the funds coming from until the Hawkesbury facility is profitable?
We are we have the liquidity today that we need to fund everything that we need to do. Right now, the funds are coming from myself. I am injecting money on a month-to-month basis, probably about $250,000 a month. I also have, over the last few years, have injected in the vicinity of about another $3 to $3.5 million. So believe me, I'm not doing this in a foolish manner. I'm doing it in a manner of being responsive, and because I see the potential, and I live the experience every day. I walk into this plant, and I'm amazed every single time that I visit it and I see it. And to be able to take waste, products that would have gone into landfills, and to bring it back to its original components, it's got to be a winner. I mean, look, and that's why I'm investing in the money, investing in the company, and putting it in the money, pending. We're going to get at one point where we're going to go for another raise, and in the meantime, it's steady as she goes.
Well, you are committed to the company's mission. You envision Ecolomondo as a global entity. Is your intellectual property adequately protected? What are your thoughts on that?
If you look at our corporate history is 25 years and more. I acquired a company in 2008. Since 2008, we've engineered, designed, invented over 100 proprietary advancements, and including our automation system. We've invested in the tens of millions of dollars where other people are just dreaming about. We're there. So for somebody to copy what we're doing, it would take them equally as long. So longevity and the cost to achieve is our protection. There's too many inventions to protect us from. So even if somebody copies one invention, there's another 99 that they have to look for. So it's the way we do things. It's in the clean manner that we do it, in the way we safeguard safety, in the manner we take care of the environment. These are all things that are very, very costly to achieve, and you have to be really, really forward-looking and innovative in what you're doing. We've achieved and crossed those thresholds because we had time, we had a patient investor, and our technical teams were able to concentrate on overcoming these uncertainties.
Very remarkable. And how do you ensure that Ecolomondo is continuously safeguarding and growing shareholder value?
Simple fact that the shareholders of Ecolomondo have not been diluted. Ecolomondo spends money, directs money to not marketing its stock. It spends money building. If you look at the amount of publicity that we've done, it's been very, very minimal because we've conserved our cash for the right things. And if you look at our stock, we went public in 2016 and at 35 cents. The stock is still trading today at 38, 38.5 cents. Yes, we had a spike. Stock is down. Some people invested at 65 cents. But I believe that if investors hold on to their stock, their day of payback will come. And we have a plant. We have a physical plant built, operating, not making money, but operating, that will make money. Whereas our competitor are still, most of them are still on the drawing board and trying to get certifications. And they still have to overcome all the uncertainties that we had to overcome while we were building. Plus, you have to come up with the capital, because I can assure you, these plants, these uncertainties always create overruns.
You are clearly ahead. In a recent webinar, you indicated that Ecolomondo is set to become a great company. What makes you believe that?
If you look at what our achievements are, if you look at taking waste, creating products that could be resold and reused in many cases as a replacement of virgin carbon black at a lower cost. If you look at our footprint, we have the largest footprint. We have the pilot facility that's built. We're building in Hawkesbury. It's built. We are very, very proactive in Texas. We've acquired the land. We received, grants from the local authorities. We have tax abatements. We have so much going for us. Plus, once we're there, once we're starting to build Hawkesbury, Shamrock, then we will move on. But what is key is the way we build these plants. These plants are modular. So if you look at our Hawkesbury plant, it's a 2-reactor module. That is one module. That is our smallest plant. So if we want to build, all the engineering plans are done. So if we want to build a plant that's 2 times the size, we build 2 modules. We don't have to re-engineer. Everything else is off the shelf. It's the thermal part is what is the critical mass. So if you want to build a plant that's 3 times the size, as we're doing in Texas, in Shamrock, then you build 3 modules. So we're reducing our lead time to build. We're reducing our cost because we don't have to spend in $8, $9, $10 million of engineering. And it's much easier for us to get our permitting because the authorities can relate to what we're doing, and we give them all the statistical information that they need to give us the authorities to do to build the plant. So these are all key things. The main reason why I believe Ecolomondo will be a great company is if you look at any business where you're getting paid for your waste or your feedstock, and you're selling that product for more than what it's costing to produce, is a great business. But in this particular case, you have an insatiable amount of feedstock and an insatiable amount of demand. All you have to do is to produce it. And that's what we're going to do. As we're building these plants, we're going to produce more product for resell, and we will control vast quantities of resources that will benefit society going forward. And the circular economy will ensure that this product is sold at pricing that will be profitable for the companies. So this company will become a great company, not because they're building plants, but because they're going to be selling product that is needed by society at lower costs and lower cost to make, plus at a much greener environmental footprint. So we're very optimistic about future. We know that this Ecolomondo will be a huge success. Plus, we are processing waste. If you look at this building you're looking at right now, Ecolomondo, Hawkesbury, it's a state-of-the-art building. You can drive up to that building and not see one tire outside. Because we're processing waste the way it needs to be processed. Okay, it's a business. Okay, it's not a dump. We have tremendous demand from different parts of the world. The United States, we expect to be able to roll out one of these plants in every state of the union. Each state has a need for our technology. So that's why I mean, it's meant I can be on it for another 5 minutes, but this is one of the main reasons. We're serving purpose and we're going to make money from it. We are helping society in two ways. First of all, to manufacture rubber, you need carbon black. Carbon black creates a lot of CO2. So what we're doing is we're going to replace carbon black that requires a lot of CO2 by producing carbon black that will require 90% less CO2 to produce. And the second thing is we're taking care of a problem that plagues almost every society on the planet. So are we expecting to get all the business? We don't. If we sit down and we analyze the feedstock, every country, every state, every province needs to process their tire waste. And we bring the better mousetrap to the game. We do not upset the present recyclers. We don't compete with them. We compete with the landfills, the companies that are burning tires, tire dumps. These are the people what we want to get the tires from. If you look in the state of Texas, the state of Texas produces 43 million scrap tires a year. 17 million are being recycled of some type, rubber crumb, architectural, sound enclosures. I mean, but you also have a huge amount. You have 26 million tires that are being either landfilled, burned, or stockpiled. So 26 million tires, we can build 5 plants the size of Shamrock and not upset anybody in the industry. We're just serving purpose and we'll make money for it. And by building these plants and operating them, we will level off revenue streams for our shareholders. And we will ensure that the company expands on a global basis, because the crumb tires are all over. Carbon black is used by every country on the planet. And I'll give you an example. I'm talking a little bit more about Texas because Texas is imminent. So we've done all of our due diligence. If we only take the tires of Texas, the ones that are being burnt and landfill, we will bring $370 million of economic benefits to the local economy, because they won't have to import all this carbon black. So this is what Ecolomondo brings. And that's why local economies want us there, because we're bringing jobs, we're bringing investment, we're creating economic benefits for them, and we're resolving a problem.
It's a win-win-win situation for all stakeholders. Let's talk about the future. How does Ecolomondo plan its global rollout, and what is its strategy for success?
If you look at Texas, why did we select Shamrock, Texas? Okay, besides, I don't regret it for 1 second. I've met so many people there, and I'm amazed every time I speak to one of them. They're so enthusiastic. They're helpful. They come to us with ideas all the time. But the main reason that we chose Shamrock, you have to find the feedstock. If you have no tires, there's nothing to do. So we chose Shamrock. Why? We're going into the northern part of Shamrock, where within 300 miles, 200 to 300 miles, we're touching 5 states. We're in an area where the recyclers have a very low footprint. So we have little competition for the feedstock, because all the recyclers are in southern Texas. If we look at offtake, the 4 largest carbon black manufacturers are within a 100-mile radius of our plant. So it was just a perfect fit. We're on a major highway. The state of Texas welcomes us. The county has welcomed us. You know, we show them what we're going to do, and they respect and they understand it. We end up getting economic benefits from them. Okay. Some grants, some tax abatements, advice. I mean, these are all things that are important. Now, we can repeat this in every state of the union because we bring the same thing to everybody. Okay. So the way we finance these things, they help us. So in Shamrock, they're supporting us with a bond, an $80 million bond. That plant is going to cost $93 million. It's going to generate about a 60% EBITDA on depending on the pricing of resources, between $45 and $50 million. I mean, this is a win-win situation for everybody. And these 2 plants will make us the front runner and the company on the planet that has the largest capacity of recovered carbon black in the free world, at least.
Let us move now to questions we have received from the attendees before the webinar, and we have to go through them quickly just to manage our time. What does your loan agreement with Export Development Canada mean for the company?
Well, Export Development Canada, I said it all along, they were a perfect partner. Keep in mind that we built our plant right through COVID. When we negotiated the deal with them, no one was aware of COVID. We worked in tandem with them, and we can hope to continue to do so in the future. They've been cooperative, they've been understanding, they've listened, and we had to do the same thing. So we're working in tandem, and hopefully going forward, we're going to continue to do so, and we're going to make this plant in Hawkesbury the success story that it needs to be. It hasn't gotten to where it's gotten just because of dreams. It's gotten to where it's gotten because of hard work, money, support. And we've received support from the EDC.
I think you've answered this question, but we can go through it briefly. What are your accomplishments for 2023, given that the 3rd quarter is almost over? And what will you focus on in 2024? And what will be your target market?
Well, if we look at 2023, we started doing batches in, because don't forget, we're producing hydrocarbons, gas, oil. You got to do it in a safe environment. You can't take any chances. The slightest little thing, like slightest little vibration, you got to find out where it is. You got to determine, what the cause is, and then you need to take corrective action. But sometimes it's the slightest little thing that you think is not, takes weeks, months. We're still in the tailwinds of COVID. What you used to pick up the phone and say, I need two of these, and they deliver it the next day. Now you ask them for two of these and they deliver it 2 months later. So, but our biggest achievement is to have gone from 1,600 pounds in January to 16,000 pounds today. It didn't get there It didn't get there overnight. It's trial and error, making sure you can't take a risk. You have to look at employee safety. You need to look at efficiencies. So we're doing this on a gradual basis, and I understand, Moneer, that a lot of the shareholders say, well, it's been a long time. Well, COVID lasted 2.5 years. It's a miracle that we are where we are. And, our budgets, the company's been very responsible. The shareholders have been responsible. So we have a lot of achievements. I'm not going to get involved into the different details or whatever, but for the fact that today we're into the efficiency mode is a very important thing. Example, we had some problems with the loading and the unloading. We've overcome most of the loading. The unloading, the new equipment is coming in on Thursday of this week, so we can install it for the emptying of the reactor. We need to load these reactors and unload these reactors, 1 hour loading, 1 hour unloading. And with the new apparatus that we're going to get, we're going to achieve those deliverables. But I like to announce things to the shareholders when we've done it, because too many times in this business, you're saying things in anticipation. Sometimes it doesn't happen the way you think it's going to happen, or your people tell you, because you think you're going to get something in a week, and it takes 2 months. And then troubleshooting. It has to be done in a responsible way, and that's what we're doing. Look, my life would be a lot easier if the stock would be at $1. Not that I get that many complaints from shareholders. I don't. I actually never get complaints from shareholders, because they respect what we're doing, and they respect how we do things, and they respect the fact that we're being careful. We're there. We're going to finish this plant. We're going to bring this plant into doing the numbers that we are projecting, because we've seen it. So all I can say is patience is a virtue. And believe me, I'm the most virtuous guy on earth. I have almost $30 million invested in this company.
Okay, please give us an update on the progress on the Shamrock project facility and its scheduled completion. An attendee is also asking about whether Ecolomondo has arranged any financing to build the Shamrock facility, and if not, do they see any issues?
Well, Shamrock is a work in process. We could have built Shamrock 2 years ago if we wanted. We certainly weren't going to break ground during COVID. The people from Shamrock, many of them are on this call today because they've been so supportive all these years. And I, being the CEO of the company, I want to act in a responsible way. As much as I don't want anybody to lose money. There's always risk involved. Hawkesbury is I believe we've overcome most of the risk. The financial risk has been taken by myself. And obviously, the shareholders take some of the financial risk, but in a very respectful way. I believe that we are doing everything that we can in a manner that the shareholders can be proud. Shamrock, I speak to them almost on a daily basis. We have pretty well most of what we need in Shamrock. We have the land, we have the infrastructures, we have the support, we have the financing, through a state bond. It's up to us to make sure that we get it. We want the Hawkesbury plant up and running first. So we have most of everything, and my formula is always in these plans to bring in joint venture partners, minorities, so the company controls these plants to mitigate capital, and we're working on the we have one in Texas, and we're working. We always try to get the locals involved. It's important because we want the locals to feel that this is part of them, and we are there. We are there. And in Shamrock, many people have become my friends because they believe in the company, and they believe in our honesty, and they understand that not only we safeguarding our shareholders' interests, but we're also safeguarding theirs.
Okay, we have a few questions left. I think we can dedicate 1 minute to answer each. Regarding the exercise price of 41 cents per share, what factors or considerations led to this specific pricing for the stock options?
Well, stock options, when you issue them, you have to, it's the price of the day. So that day, the stock option was 41 cents, and that's what we put. We actually have an option by the authorities that we can go down 25%. So we could have actually issued the stock options at 25% less than 41 cents, and we opted not to. So the stock price of the day was 41, and we left it at 41. I have to say, all the people that receive stock options are people that do not get paid and have been there for the company for some of them decades. So, and if you look at many other companies, the executives, what they get, it's many, many more. However, we do not do it at the expense of the shareholder. These are options that were set into place. The date, the formula is there since the date that we went public. So those options were in place, and there was no dilution, recent dilution. They were factored in from before, years back.
Moving forward, you will need more experienced workers. What is your current burn rate and foreseeable future?
Our current burn rate, if you're looking at operational, I would say is probably in the vicinity of 150,000 a month. We bring in employees as we need them. We have putting together a strong management team. We have operators that have been trained. Some of them have been working for the company a year and a half. We have several mechanics. We have the head of maintenance, a new head of maintenance starting October 2nd, fully experienced person. And we have 7 other employees that are just on the sidelines waiting, all experienced, waiting for us to bring them in. They'll probably be brought in sometime in October.
Has the rise in interest rates impacted any future plans of Ecolomondo?
Well, obviously, higher interest rates impacts everybody. In our particular case, when we build these plans, and we're borrowing long-term money, the effects of borrowing are not as severe as borrowing short-term money. So for the time being, no. And however, it has impacted the cost of financing for the Hawkesbury plant because it's a variable rate. All new plants that we build will be fixed. It's one of the things we've learned.
In your opening remarks, you noted that by the exit of 2023, we will be very, very close to break even and generating positive cash flow. What level of sales would be required to break even? On the current selling prices, if you produced the 22,400 tons of product, what level of sales could be achieved? Estimated EBITDA margin on these sales?
Well, we feel that by December, we should be at the 400. And again, I hate giving specific numbers, so we'll say in the vicinity of $400,000. And the 22,400 pounds, that's tire waste. It's not rubber. We expect that by May, we should be in the vicinity, depending on the price of commodities, obviously, because we produce commodities. We should be in the vicinity of about $1.5 million of sales per month, with an EBITDA in the vicinity of about 52%.
The last question we have is about the Hawkesbury facility. How many batches per reactor per day, and what is the loading and unloading time? And when will the Hawkesbury facility be able to achieve the design capacity?
Well, we expect to achieve that design capacity by sometime in April, May. And our expectancy right now is to do 3 batches of 15,000 pounds. So our loading has gotten much better. Our unloading, we knew what the problem was. It was not our fault. We bought apparatus that was robotic to empty the reactor within 45 minutes. The company that sold us never achieved those deliverables. We still have the robot in our facility, and we had to find other designed products that would empty the reactor in the allotted time. We found it, we purchased it, we're receiving it. It should be installed within the next 2 weeks. And at that point, the reactor will be emptied within the hour. Versus right now, it's taking 5, 6, 7 hours. But it's not a showstopper for us. We'll still keep moving along. That's the way we are. Nobody would have known anything unless we would have announced it. We actually announced it in press releases. So it's not only we tell the shareholder what's the good stuff, we tell them what the reality of things are. And that's been my goal from day one. It's unfortunate that we ended up with COVID. It hurt the company a lot. We've overcome because we had people that believed in it. who are able to come and put in the money, not at the expense of the shareholder. No. So I want all the shareholders that are listening and potential shareholders one day, hopefully they're on, to understand the way we do things at Ecolomondo. Not only technically, but when you're looking at ESG, corporate governance, you know, I think Ecolomondo is the ideal model. Not because I'm the CEO and controlling shareholder. It's because I take great pride in telling people, especially the people that put their hard-earned money and invested and trusted, and giving them the right time of day at all times. But like I said, COVID has hurt us, but we didn't keep running back to market. The next time we go to market, it'll be for our global rollout, which we will start with ShareMark. And we have another 4 or 5 plans, areas lined up in the States. But one step at a time.
One of the attendees is just asking to confirm one final point. By May 2024, you hope to have sales of 1.8 million per month at a 2% EBITDA margin. Is this correct?
No, I said 1.5 at a 52% EBITDA margin.
All right. Thank you so much for the clarifications, Mr. Eliot. Unfortunately, that is all we have time for today. Thank you everyone for taking the time to watch and participate in this interactive webinar. For any unanswered questions, please visit Ecolomondo's interactive investor page. It will be listed in the chat. Again, this webinar is being recorded and will be available for viewing after the event on both Ecolomondo's and Global One Media's YouTube pages. Ecolomondo's journey is just beginning, so stay tuned for future webinars and updates. Thank you again, and we wish you a pleasant evening forward.